Okay. So I'm drawing the pattern out. I called this the cool pattern for you guys last week. So let me quickly draw them out so you can. So we have this, and again we have this one too. Have that one, then this other one. So I said there are 4. No, I said there are 5 because I have this one too also, but I don't trade it all the time. I have this one too also. This one. So regarding my POI now, POI. Now there are 4 type of POI. 4? Is it 4? No, 3. 3 type of POI that may I trade. There are 3 type of POI that may I trade. Let me write it down for you guys. Trade the order block. Trade the order block. So the breaker block. And QMR. Now, these are the 3 type of POI that may I trade. There might be some other POI that you guys might know, but these are the only 3 type of POIs, and I like to trade. And the rules are, let me give you guys the rules. Now, number 1 rule. Where is that thing? Number 1 rule is price shouldn't have mitigated my POI. Second, close to liquidity. And the third rule, third rule. Now, these are the only 3 rules that may I pay attention to anytime I want to pick my POI. Now, the first 2 is that market shouldn't have mitigated the POI, either the breaker block, the order block, or the QMR. The second rule, my PO point of interest should be close to liquidity. And the third rule, liquidity should be protecting the point of interest. Now, if you guys don't know what order block is or breaker block, no, I'm guessing this is an intermediate class, so you guys will know what order block and breaker block. But let me just brief. We have this. Normal SMC traders will be saying price will come. This is an order block now. An order block is a key level where market makers place their order. An order block. We have a breaker block. It's just like a point of interest of where all the orders are being taken. We have an order block, we have a breaker block, and we have a QMR. If you don't know what QMR is, it's just like an order block that fill price. Now, this is a QMR. So we'll be activating this should be your liquidity. Now, these are the three type of order blocks. The three type of POI that I like to trade: the order block, the breaker block, or the QMR. Now, let's look for it on the chart. Today now on BTC, which type of POI I'm trading here now? Which type of POI is this? Let me draw it out for you guys. You guys should tell me which type of POI this is. Now, this type of POI is a QMR. It is the sell version. Yes, it is the sell version of this buy. It is the sell version of this. You know, this is a buy setup right here, but this is a sell setup, sell version of a QMR, which is this right here now. This is a QMR, and that was what occurred also again at this level. We have this as our break of structure, a break of structure towards the downside, and we have, in this case now, we are having happy pattern, which is this liquidity before a break of structure, which is this guy here now. Happy pattern, break of structure, then we have liquidity before our break of structure. And which point of interest did I use right here now? I made use of a QMR. A QMR at this level now. A QMR. Price mitigated the QMR and start going bearish. So again right here now, which type of POI did I use here? I have a break of structure towards the downside here. A break of structure. And as price was coming back into this zone, price gave me liquidity before tapping into that. Gave me liquidity before tapping into that my point of interest, then start going bearish. So the type of point of interest that I like to trade is the breaker block, the order block, or the QMR. And you can see this QMR is not mitigated. It's not mitigated. This QMR is not mitigated. Now let me show you an order block. Now let me look for the trade I took today on BTC. Was it this one? No, this is the 15-minute time frame. Now let's analyze these trades of today. Now who can tell me which type of pattern is this? Which type of pattern is this? We have a break of structure towards there. No, this is it. We have liquidity before break of structure. So the trade that occurred today, this is a blue pattern. A blue pattern. Yeah, you are correct, Mr. Kennedy. This is a blue pattern that is forming right here now. We have liquidity before the break of structure, and that was what occurred today on BTC on 5-minute time frame. So I trade this with the team, break of structure towards the upside, and we have liquidity before a break of structure. And as you can see, our market tap into that liquidity, zero drawdown, almost like 15 pips or 150 points, and start going bullish. So zero drawdown. This was a sniper entry, liquidity before a break of structure. Also with this one too, we have this price mitigated a breaker block as price swept this external liquidity. Now there's something you guys don't know. Let's say we have this. This is a lower time frame trades now. Let's say we have this on the higher time frame. This is an external liquidity. Let me give you guys what external liquidity is. We have this, and this. Now, this high right here now on the higher time frame is called external liquidity, while all these trades we took right here are called internal liquidity. Internal liquidity. These are internal liquidity. We are trading inside the zone of the higher time frame. This is the main high. This is the main low, which is external liquidity. External liquidity. Buy side liquidity. Sell side liquidity. So all what we are trading right here are internal liquidity. All what I'm trading right here now is internal liquidity, because this is the main high. This is the main high. This is the main low. External liquidity, external liquidity. So all what we are trading right here now are called internal liquidity. Hope you guys are following me. So internal liquidity. We have this liquidity sweep. So that was my buyers now. My buyers now with my trading plan. Where did I start from? From the 2-hour time frame. Now let me explain this trade I took today with my point of interest and my liquidity. Which type of pattern was it? Let me explain to you guys now. Okay, let me explain to you guys. As you can see right here now, all these are internal liquidity. First of all, we can see that market is in error. Actually, this is my 15 minutes time frame chart. Let me now this is it. From the higher time frame, what can we see right here now? You can see that mostly price has been going bearish. Change of character here. Change of character. We have our liquidity. We have a change of character, liquidity grab, market start going bearish, break of structure, come back to a QMR at this level, giving some kind of liquidity on the 5-minute time frame, drop. The same one that I explained to, drop. So mostly we are going bearish as from the higher time frame. Then on the lower time frame, which is the 15-minute time frame, I saw this. I saw this break of structure towards the upside. This break of structure towards the upside. We have, first of all, I have a break of structure at this level. This is the break of structure. I have a break of structure at this level. The market came back to sweep liquidity. Market came back to sweep this liquidity. On a higher time frame, market broke this low, which means we are trading a pullback. We are trading the pullback into this QMR right here. As per we are on our higher time frame is telling us bearish, which is the 2 hour. So on our 15 minutes, 5 minutes time frame, we are going bullish, which means we are trading the pullback. Market is after a break of structure, expect you'll be looking for a pullback. Just know you'll be looking for a pullback, then impulse. Break of structure, pullback, impulse. So as I knew that this is a break of structure right here. So as market was retracing back into that zone, filling out all this fair value gap right here, I knew that market is moving back into a higher time frame QMR, which is this 15 minutes time frame that I showed you earlier. So that was what got me this bias that market is going bullish. Is retracing back into that zone, into our QMR on the 15-minute time frame zone before a bearish move. So that was what gave me that's my confluence from the higher time frame to the lower time frame. So I trade the pullback right here, break of structure, liquidity grab, market start going bullish. So I tried to look for a pattern at this level. I can't see anyone, but market gave me this blue pattern. So I traded this towards the upside. So as market broke this high again, I also explained something last on Monday that this type of setup, I don't like to trade them because I always wait for my liquidity to pull back into that zone. Last on Monday, I was saying this is also a liquidity right here now. A break of structure, pullback, then break of structure. I was saying this is our liquidity. But the way I like, if market is in my breakout block, I'll look for a confirmation on the lower time frame in order to go bullish, in order to continue the bullish trend. So on the lower time frame, I didn't see any confirmation here. This is my liquidity now. This is the pullback. This is my liquidity. So I didn't see any confirmation right here. But what do we have here? We have a break of structure. Market giving another setup. We have a break of structure towards the upside. As market was coming back into this, as market was coming back into this POI, we have this liquidity, this some type of liquidity. We have this liquidity grab, a break of structure, market retrace, then boom. Please, Mr. Redwan, I don't know what CA means. Can you clarify? As market was coming back into this level, markets gave me liquidity before tapping into my main point of interest, but my higher time frame is still telling me that we have a QMR at this level. So I should be very cautious. I should not overtrade. So I'm not even going to say I want to target this main high. No, because my higher time frame is telling me that a QMR is at this level. So as soon as price retrace back, give me liquidity before tapping into my point of interest and start going bullish. So I buy to sell. As price mitigate, I took my TP at this level. As price mitigated this QMR, I started selling BTC immediately. Okay. Immediately, I started selling BTC immediately. So I was expecting, now my anticipation is that price to take out this external liquidity. So we are still expecting more bearish momentum for BTC to take out this external liquidity. Now, which POI did I use over here now? I made use of an order block. Right here. So price will trade back into the other block and start going bullish. Now let me give you another entry block. Started when I've seen your message, I will explain. Was it this? Okay, this is it right here now. As you can see, a breaker block is occurring right here now. Now I'm going to explain that my confirmation entry, because we have a break of structure. We have this is it, not that. We have this, we have a break of structure, and that's this type of setup that I like to look for confirmations now. So we should be expecting more bullish momentum for GPJPY. Now my confirmation entry, like I said, I go to a lower time frame to look for this type of setup, this type of confirmations. Sorry, this guy like this, then our liquidity gap, then we start going bullish. This is the type of pattern I like to look for on the lower time frame. Now let's check it on a lower time frame right here now. Look at it right here now. Look at it. Instead of going to a lower time, look at it right here. We have this, then that liquidity, then start going bullish. Don't mind me the way I did my breaker block. This is meant to be the breaker block because it must fill out this week. So this was my breaker block. So you go back to a lower time frame. Like let's say price just mitigated this. This is it right here now. I didn't trade this, but I did give out the signal. So as soon as price mitigated, as soon as price was coming back to that other block, as you can see, we had this, the liquidity grab. Then let me draw it out. We have this liquidity, this break of structure. Price came back, grabbed that liquidity, then boom. As you can see, the confirmation is right here. So anytime I see this kind of setup on my charts saying my liquidity is not that close into that my POI, I look out for this confirmation. This type of setup, I look out for confirmation. I always wait for my liquidity to come back into that zone. And if you have learned from market experience, you will know that as soon as this breaker block got mitigated, market will still come back. Tap that liquidity, tap that your other block and start going bullish. With my experience, I've seen this happen all the time in the market. This liquidity that is not close to your break of structure zone, market will come back. You look for your confirmations. Market will go bullish though, but you will see that market again will come back because that liquidity now is inside that zone. So you will have confidence that without any lower time frame entries, place your trade here and you see that market start going bullish. I learned this from experience that this is an experience. Look at now, we have this now. So we should be having this liquidity now for GP now as for next week. Market failed to break this high. But market is just trying to give out liquidity, coming back into this and start going bullish. You will see that this is exactly what is going to happen next week. You will see that, as you can even go say, I analyze this for my I analyze it for my students. We have accumulation, manipulation, then distribution. Accumulation, manipulation, distribution. So this is a type of market maker price action that occurred right here now. So market makers don't like to buy at this level. They wait for where the price is really cheap. So their next entry, market makers' next entry is going to be at this level. as you can see, market makers want to take another order right here now and start going bullish. So confirmations, if you are seeing this type of setup in the market, look for your confirmations. Now, I've talked about the order block, the breaker block, and the QMR. The order block, the breaker block, and the QMR. Now, let's start analyzing the charts of today. All my trades for today. Now, this gold trade, where is it? Is it this one? Let me hold on 5 minutes, my friend. Okay, I think we are running out of time now. Telling me we have less than 10 minutes left. Now, let me quickly talk about this one now. If you guys can tell me which type of pattern is this, I know you guys are following. Which type of pattern I traded right here now? Which type of pattern is this? So I took this trade today. Okay, this is a blue pattern. Blue pattern. This right here now, which type of setup is this? This one right here now, which type of pattern is this? So just open your eyes very well. With this type of setup now, you can flip any account. I actually flip a 9,000 naira account with this type of setup. No, this is not a blue setup. Mr. Futka Manguko now. So I'm going to answer your question. I'm going to have seen it. Yeah, this is a cool pattern right here now. A cool pattern. So look at this setup now. Zero on just 10 pips SL. Just 10 pips SL. And as you can see, almost up to this is like 50 pips. 50 pips or so, okay? Yeah, 50 pips. So with this trade now, I risk only 9,000 to make up to 100. Up to 100,000. Up to 100,000. Let me even show you guys the screenshot. So I'm going to quickly explain this question that Mr. Now, look at this now, guys. Look at this now. A sniper entry. Price almost hit my TP, but I closed at a QMR at this level because I knew that as price was going bullish, it was building momentum. As price was getting close to my TP, start losing momentum and start going bearish. So I took my TP at this level. As you can see, a sniper entry at that level. So go and try to analyze this setup on the chart very well. Go and look for those patterns. Make sure your liquidity is very, very close. Okay. Now 2 questions. Make sure your liquidity is very, very close before you take your POI. As you can see, this is the liquidity right here now. We have this break of structure. Then I add this liquidity. Then this is my POI. I actually use this candle as my POI, but I took my trade at close to, after this liquidity has been taken out, I took my trade immediately. I didn't wait for the POI. Why? Because as soon as market grabs liquidity, it starts moving immediately. Just imagine this. You seeing an hot water, you seeing a bucket of water. You don't know whether it is hot or it is cold. You just put your hand inside. And to your to your knowledge, that water is very, very hot. You know, you will remove your hand immediately because it is burning you. That is how fast market is going to move. Because as market tap that SL, tap that almost like $1 million SL, absorb that liquidity, market will start moving immediately. So make sure your POI is very, very close to liquidity. Very, very close. Look at this now. Look at this. Look at this break of structure towards the downside. This break of structure towards the downside. Break of structure. Look at my liquidity. Look at my liquidity. This is an hot pattern right here now. A break of structure, hot pattern. Then as soon as market grabs that liquidity, market start going bearish. If you have to wait, say like most people be saying this is their POI. They are not wrong. This is their POI because you'll be expecting this to be their POI. This is your liquidity and this is your POI. You know, it does not make sense like that. So make sure your liquidity is very, very close to your POI. Even though market takes you out and tap that POI. With my own experience, market does not make this move all the time because market only seek liquidity. As soon as liquidity has been taken out, market have no business of going up again and start going bearish. As soon as the liquidity has been taken out, market will start going bearish immediately. Market will start going bearish immediately. Now, let me show you another setup. Now, Mr. Please, have I answered your question? I have less than 3 minutes left. Make sure your liquidity is very, very close to your POI. I don't want to say you should pick a fair value gap as your entry. No, I don't trade fair value gap. The 3 POIs that I gave you guys, those are the POIs I trade. Make sure your POI should be very, very close to your entry. POI right here. You should not, this other block now, if you have to use another block here, is far. It's too far from your entry. So look at this one now. If I'm to wait for, I actually price mitigated this breaker other block, but I took my entry immediately after that liquidity has been taken out. So make sure your liquidity. Look at this also now. Look at this. We have this. Actually, this is not my POI. This was my POI. Look at this. How that liquidity is very, very close to my entry. A cool pattern occurred right here again. So those type of patterns, you guys should go and learn, try to analyze them on the chart very well. Look at that entry. Sniper entry 0 Jordan 10 pip SL. Imagine you just start trades with that 10 pip. Just say you are risking that 10 pips now is going to be just 9,000 naira. Just start trades with that 9,000. You know what it will be for you guys. So go and learn this strategy very well. Make sure your liquidity is very, very close to your POI. Look at this trade also. This one. Look at this blue pattern. Liquidity. Don't mind the drawing. Liquidity before a break of structure. Liquidity before a break of structure. Then boom. Took my entry at this level, the QMR. But price did not mitigate the QMR. I just took my trade immediately at the liquidity level. So you guys should go and learn the strategy very well. Let's look for more trades. Okay, I'm going to send you guys a picture after the class. I think I still have it. I'm going to send you guys a pic. So we have a break of structure again. Liquidity close to my POI, which is the other block right here now. Look at this again. 10 pip SL. 10 pip SL. Market grab it and start 1:3. You know how many you stack with this? Just 40 pips. You are done for the day. Like that. Let me show you one trade entry too. That's on Euro USD. On Euro USD, I took today earlier. On Euro USD, look at this now. Market, I actually set a limit order because I was doing something. Market did not trigger my limit.